Dear friends, welcome to Weekly View on Markets. Markets continued their positive momentum in this week after a super rally in the previous week. Small cap index outperformed during this week by gaining around 2.73%. Charts have crossed major resistance zone and technically market is likely to move to higher levels in the coming week. Quarterly results so far have been very encouraging with positive surprises. That means most of the stocks have beaten the street expectations. Any good news from West Asia, that is the tussle between US, Iran, and Israel, will be a good trigger for the markets to rally to the higher levels. Nifty index has gained 0.77%, that is 187 points, and it has closed at 24,570. Bank Nifty index gained around 0.84% and closed at 57,746. Midcap index also gained 0.87%, that is 548 points. It has closed at all-time high level of 63,463. Small cap index also is trading at all-time high levels. It has closed at 19,867. It has successfully crossed the resistance zone of 19,500. It has gained 2.73%. It is the outperforming index during this week. It has gained 528 points. India VIX is quite steady at around 12.15. There were more number of sectors gaining in this week. PSU banks gained the most, as some of them, including SBI, announced very good results for the quarter one. Defense sector gained 4.30%. Auto sector gained around 3%. Metals also gained around 3%. Information technology, after gaining in the previous week, this week also it gained around 2.73%. Manufacturing also gained around 2%. Commodities, infrastructure, FMCG, oil and gas all were consolidating with minor gains. Media sector lost around 3.94%. Realty sector lost around 1.72%. Remaining all sectors like NBFCs, private banks, healthcare, public sector companies were consolidating with minor losses. So there was more number of stocks advancing during this week, and we can clearly see that almost all the indices have traded with positive bias during this week. Now let us look at technical charts. This is the daily chart of Nifty index. Here we can see Nifty index is in a consolidation phase. It is consolidating on the higher side. The consolidation is around 24,750, and on the lower side it was at around 23,750 shown by this line. Now in this week Nifty came out of this range on Monday, and then again there is a 2 3 days of small correction, and on Friday it has given a small green candle. Nifty has to conclusively take out this resistance zone. It has to go about 24,750. Then we will see a bigger up move. This all depends on the developments that is happening in the Iran. This is the chart of Nifty mid cap index. Mid cap index is trading at all-time high. It is at 63,463, and this also we can see it has crossed the resistance zone of 63,000. So this is a good sign technically, and after few days of consolidation, this is likely to go higher. And Nifty Mid Cap Index has got good support at around 61,500 levels, shown by this support line. So in case Mid Cap Index falls to this support, it will be a good buying opportunity. This is a chart of Nifty Small Cap Index. Small Cap Index recently has shown a very good strength. We can see here lot of green candles, and it is almost going up at a 60-degree angle. So small cap index has got strength and it is already trading at all time high. It has crossed the previous high of 19,600, and it is now at 19,867. We can see here it has crossed this resistance zone of 19,500 to 600, and it is trading at a much higher level. We can see further higher levels in the small cap index in the coming week. This is the chart of Bank Nifty index. Comparing to other indices, Bank Nifty index is comparatively weak. Here it has got resistance at around 58,500. Whenever it is coming around these levels, we'll see a small correction in Bank Nifty index. It has got good support at around 57,000 levels. So it is just trading in a range of 1000 points. Bank Nifty index, if it takes out this 58,500, then we will see further up move. Now let us look at some of the macroeconomic parameters. RBI foreign exchange reserves is at 692.87 billion US dollars. It has gone up by around 10.5 billion US dollars during this week. This is quite a good encouraging foreign exchange reserve position, which can take off some of the economic shocks. Foreign exchange rate is at 95.20 rupees per dollar. After hitting at around 95.5, rupee has strengthened. It is at 95.20. Dollar index is steady at around 99.89. A steady dollar index shows that the global demand for dollars is quite steady, and accordingly it is helping rupee also to appreciate. And another factor is the crude price. The crude prices have dropped from around 95 level to 83 level. It is at 83.55. Drop in crude prices all have also helped rupee to appreciate during this week. 10-year G sector bond yields is at 6.81. It is more or less steady. FIIs have bought 2,887 crore net for the week. On few days they have sold like Wednesday and Thursday small quantities, but remaining all days FIIs have bought. FII have been buying net for last 2 weeks, which is a very good sign. It will give good support to our markets. Domestic institutional investors continue to buy. They have bought 7,767 crore during this week. So continued support from institutional investors will definitely help the market to go to higher levels. PMI manufacturing data and services data has come. Manufacturing PMI is at 53.5. It is slightly a drop from the previous month. And services PMI data has come at 53.3. This is also a drop. Both PMI numbers have dropped. So this shows that the industrial and commercial activity, services activity has slightly come down in the month of July. The hostility between US and Iran continues. There is no any concrete report of reaching peace deal or any agreement. And also the ship movement through Hormuz Channel is having troubles. There is no free ship movement. That is also affecting the international trade and crude movement. Quarterly results is in full swing. Many more results are yet to come in the coming week. Based on the results, we will see stock specific action. There could be volatility, but mutual fund investors should not worry about day to day volatility. They should continue their SIP investments. Rupee cost averaging helps them to get better returns when the market recovers. The volatility is the friend of the SIP investors. They should continue their SIPs. They will get better returns in the long term. This is all for this week. If you like my video, please subscribe to my YouTube channel. You can refer to your friends. You can ask your questions, which I will reply. We will meet again next week. Thank you.